I'm pleased to say, to help break all of this down, on set with us, Sound Planning Group CEO David Stryzewski. So fun to have you here. As you take a look at sort of all of the things we've laid out for this week, what are you most excited for as you think about directionality of the markets?
Well, as I look at the markets right now, I mean, we just have to look at the consumer here today. You know, 70% of our economy is based upon the consumer spending. So we're seeing a lot of changes happening right now in our behavior and our habits on some of these things. And so as we're looking at numbers that are showing up, hey, I'm looking for organizations that are going to be more resilient, that are going to have better cash flows. I'm looking for opportunities right now in other places in the United States right now. So as we're gearing up for some of this, there's a lot to be looking for. Way too many things to be discussed in short sound bites.
Yeah. So David, you know, as we know, Dollar General coming out this week, and you look at a comparable, Dollar Tree reported last week. So you say you're looking for strong retailers, strong companies. Dollar Tree beat expectations, but it went down because the story there, they're doing well, beating expectations, but their consumer is buying consumables, so food. When a Dollar Tree or maybe a Dollar General, depending on what we see this week, becomes the grocery store, even though that's beating, that tells a different story. So can you break down what you're going to look for within those like more savings stocks?
Well, I would say this much. You know, there's a lot of discretionary income that has gone out the door. And people today are just adding more to their credit cards right now. Obviously, we're looking at delinquency rates that are elevated here. So these are some big challenges here today.
Can I talk about those delinquency? We have a great chart actually on that. So I want to interrupt you.
Yeah.
And to me, not to cut you off, it was not the delinquency rates for the top 100 commercial banks, but delinquency rates in yellow that you see for the smaller banks, a record high. That is a problem because you have unemployment at 3.5%.
That's exactly right. So record high credit card debt with record low unemployment. That's not a good recipe. This is a very weird place to be. But going back to your point here, you know, those shoppers that would be going to those type of locations, they just don't have the cash to be doing it any longer. And so when these delinquencies rising right now, we got new student debt payments that are going to be going back on. I'm looking at big problems here as we approach this fourth quarter.
David, let me switch gears with you and talk about China. Commerce Secretary Gina Raimondo in China a little over a month after being targeted by Chinese hackers. So going to China, Chinese hackers. She's the fourth American official to head to the nation. Everyone else coming back, as you know, with nothing. So I look at this and think, why are we still sending more government officials to China? What is the point of this, except maybe Joe Biden really doesn't want a confrontation with China before 2024, and so this is sort of like the repeated peace offering? Is there an economic reason we're doing this right now?
I think this specific meeting was set up last year, so they're just following up on their schedule with it. But to your point, you're right. We've got a lot of deficits and challenges here. China's an important trade partner, though, in the world. And so even though they are, very negative as it relates to this whole BRICS idea and some of the challenges that we're seeing, and this even the meeting last week with Saudi Arabia getting inducted into that. Yeah, it is an interesting conversation, but you wish that diplomacy was a little bit more active and not just cause and effect. I think we should be the leader.
The problem is I don't see any effect. We're going there and doing things, but how are we addressing some of the big issues that people care about? It seems like they come back and they're empty-handed and, gee, wasn't it nice that we visited and had a good dinner?
Yeah.
I think we need a little more than that at this point.
Yeah.
Agreed.
Talk to us about Friday, Jobs Day. We're also going to be getting PCE, the Fed's preferred measure of inflation. What do you make of a labor market and an equity market that is rallying when you have 3.5% unemployment? Do you start to see weakening within the labor market?
Labor markets tend to actually hit their bottom after a recession. So we've not even, quote unquote, been in a recession. There's only been two other times that we've seen the unemployment rise prior to the recession showing up. So here's the point. You know, the labor market has been strong. Employers don't want to let people go. That's absolutely true. It's difficult to find employees today. And many of these organizations have been overstocking on some of those employees that are hard to find. So I think some natural attrition is important. But as some of the data is coming out, we've seen, rates rise and ultimately credit's just a lot more expensive. And if you're a growth company specifically that isn't making enough money just on basic revenue, I'd say that you're probably looking at cutting some dead weight there. Not that that means people specifically, but we need to get the bottom line right.
Got it. David, thank you so much for joining us on set. We really appreciate it.
Thank you.
All right, the race